E-man commenting that if yields were to rise more at the long end rather than the short end, for U.S. to switch issuance from longer end would be the wrong choice. Correction, for us to switch issuance from the longer end would be the wrong choice.
Okay, that's better. Welcome to the live trading hour brought to you by the Live Trader, and that was probably the worst start of a YouTube video we've probably ever done. So apologies for that, but without further ado, let's get straight into it. We've got a few interesting opportunities to look at as we approach the US trading session, where we'll have an influx of US capital coming into these markets, and we've got some interesting potential setups in the pipeline. So let's go through and we'll explain these opportunities to you as best we can. Please see our risk warning currently up on the screen. And just be mindful, of course, always of the risks involved in trading these financial markets. Okay, so first things first really is we just want to be mindful, is there any major news events over the course of the trading session that we are likely to need to take into account? The last thing you want to do is to sort of get into a euro dollar trade, for example, 20 minutes before a major ECB or FOMC or Fed announcement, for example. So you just want to just be on the right side of the news flow. As you can see today, nothing of any major concern. Anyone trading the dollar later on at 7 p.m., just be mindful. Jerome Powell will be testifying on the Fed's emergency lending programs and current policies before the House Select Subcommittee on the Coronavirus Crisis. So obviously the Fed got involved and put together these emergency lending programs to try and keep people solvent really effectively and prevent businesses from going under. So now he'll be testifying, and there will be a series of he will be quizzed on those decisions. So apart from that, there's nothing of any major concern this afternoon. It's always just quite good to just go through that routine of just be mindful of some of the major news events. Something that you're probably hearing an awful lot about in the news is bond yields. There is a really close eye on what the bond markets are doing right now, as we try to adjust to the Fed looking to increase rates, to see 2 rate increases by the end of 2023. That was the big news from last week, as of Wednesday evening, and we've had 2.5 days of very significant selling across most markets. We've had a little bit of a bounce back today, but the correlation is we've seen markets like the bond yields actually soften quite a lot, soften to very significant levels. So this was the initial drive to the upside. We saw a sharp reaction as a result, and what we've seen since is a little bit of a calming in the bond markets. So very mild uptick probably over the course of today's market conditions, and really we're looking for as to whether the lower the rate when we're talking about longer term bond yields, and the US bond yield is a good marker, let's say, for bond yields generally. And the lower the bond yield, the more supportive it is for stocks, and as a result we're likely to see some correlations play through, like the moves in the dollar, for example. That is also true to the upside. So if we see quite a sharp increase, what you're likely to see is stocks sell off, and markets like the yen and the dollar benefit accordingly, because there is a flight to safety risk. There will be major concerns about the inflation and what that means for the Fed in terms of increasing rates, firstly, which they've now finally admitted to. So everything they've been saying for the last 6 months, that they're not too concerned about the inflation story, it's it's all under control. You know, there's nothing really to see here. They've now come out and said, actually, there is quite a lot to see here, and we will be taking measures and steps to try and just offset some of the downside risks that inflation can have. Good afternoon, Finbar. Hope you're well. Can I ask, are you still in any of those dollar pairs? I know we were selling the dollar a lot last week, and I know you were in quite a few of them. So did you book in profit Friday evening, or did you hold them over the weekend? It'd be interesting to know. So we've always got this bond yield picture just sitting in the background. So anytime we see a bit of a sharp move in the indice markets, we take a quick look at the bond yields just to see where they are at. Okay, so let's see what opportunities we have for you today then. So let me get up our trading platform. So in our trade plan webinar last night, what we were really concerned about was a dead cat bounce. So that's when prices fail to make new lows. You see a lot of liquidation. So a lot of these traders that were selling these markets yesterday were taking profit. So this can be described as profit taking. If I just bring this level down a little bit there. So you can see that we had a double bottom on over the course of 2 days. And we saw some significant buying coming in, and a lot of that is these sellers. Let me get up my pen for you, because let me explain what's happening. So we spend a lot of time just understanding and looking at market conditions. But we had a very distinct change, which was very much supported by the FOMC on Wednesday. So one of the bigger things is regarding the tapering. They're likely to bring forward the tapering process to some degree. So when we look at this market here, we went through probably a month of just nothing but sideways moving markets. You could say latterly there was the potential for a little bit of your bias would be to the downside, just this little gentle little grind lower. A lot of the movement over the last 2 weeks prior to that move.
Further from UK DMO head Steeman saying international ownership of gilts remains similar despite increases, gives reassurance investor base diverse, not dominated by central bank QE.
Okay.
Just to review, UK DMO.
I might just put that on pause there for a second. So what we can say is this market had been in a sideways moving pattern. Please note these candlesticks. That is quite telling as you build up to a major break. But look what happened towards the last 3 days of last week. A really sizable move to the downside. So this is the game changer now. This is the direction that we are looking for this market to move. So when yesterday we get this little bounce back, that's fully what we would expect is that bounce back. And we obviously don't know whether it'll fail to break the highs or whether it'll push higher. Whatever the case may be, we'd fully expect that type of price action to occur. But what we are is looking for the next opportunity to the downside. The market has revealed its direction. Now things can happen for this analysis to change pretty comprehensively. But just to be clear, we're looking for selling opportunities in markets like the euro dollar and potentially across some of the other markets. Now there is a caveat to that because we can classify yesterday's price action as a dead cat bounce, and now we are focusing on today's candlestick. And when we look at this over the daily time frame, we're not filled with huge confidence so far today. So we can look across these markets, across the dollar pairs, and we've attempted to make a move lower, and we've kind of reversed probably 50% of today's move. So that creates a bit of an issue for us because we want to see a little bit of clearer price action. But what we have just above these three daily highs, today's high, yesterday's and Friday's high, is the potential for a structural failure to the upside. So although we are looking for opportunities to sell the euro dollar, more sort of medium term perhaps, short term, if prices roll back above the 1925, then what that presents is a high probability trade to the upside. The problem we've got right now is we clearly need to be a little bit patient with this trade. That's what's been happening in the last day. So we've just got largely range bound markets, and you can see that it's a little bit easier to see it perhaps on smaller time frames. So this is effectively what we've been seeing over the last day, is broadly speaking prices very much within this range. Now there's a strong appetite to suggest we will get that continuation trade to the downside. This was another sort of range bound period. So we are just looking at this market and suggesting actually if we break out at this level, we're likely to be pushing down to the 118.50 level. However, the same also applies to the upside. If we can break above the 1925, and we know that it's a previous levels of resistance up at these levels, so it's a strong level of resistance and this is a strong level of support, then a breakout of these levels give us the high probability trade. And right now we're kind of in between that little phase. So we talk an awful lot about three things with our traders every day, and it's consistency in your decision making. If the reasons why you get in and out of trades change all the time, if you're using moving averages 1 minute, if you're looking at Elliott wave patterns the next, and then you're switching to Fibonacci, and then you're going to support and resistance like what we are, and we are trend traders, so we look for trend based moves. That's why we were able to sort of benefit quite nicely towards the end of last week, because we had markets moving with a high degree of coherence, where the fundamentals were bearish, the technicals were bearish, and the sentiment was also bearish as well. So it was a coherent move, and under situations like that, we can certainly increase our activity somewhat. The euro dollar, and I can't say that's been true of the last couple of months, so that therein lies some of the difficulties with some of these market conditions at the moment. So we are in a very important decision making zone, you could argue, and hope that analysis does make a little bit of sense. The overall trend is to the downside. As you can see, this is the break. This is the direction in which traders were happy to put money where their mouth is and start driving prices lower. Now we're inside yesterday's highs and lows. We've got to be a little bit patient with the trade, and we're looking at the more recent price action as well, and it's a little bit inconclusive. Now, very similar analysis across many of these markets. So if I just flick through them quickly. So this is the move in which we are very, very interested in. That's when we'd been moving sideways for quite a while, and we get the break to the downside. So if you ask us what's our direction for now, it's still to the downside, although yesterday we had the dead cat bounce, which we would expect, and now we want to see if there is appetite to push prices lower. The answer to that question for a part of today is yes, there is strong appetite to continue to push prices lower. However, the price action over the more recent number of hours has been pulling back. We get a better accurate picture on the so the last 3 hours, all we've experienced really is a pullback off the low. So this is your pullback trade, this is your sideways moving, and then we've got this little structural failure to the downside, and now we've got the pullback to this level, which is what we would like to see happen. So will we get the next leg to the downside? That would give us more confidence for the sell trade further lower. So that's how we take our analysis off the daily time frame, and we can go in on smaller time frames and start making those decisions. It's interesting to see this market bounce off the monthly lows. You can see Friday we kind of failed to break through those lows, and yesterday as well we broke through them very briefly before reversing. Oh, I see, Finbar. Okay, so you held those trades over the weekend. You took profit on the euro dollar yesterday. Very well done. In the New Zealand dollar only, and you were speaking about that yesterday, weren't you? The Aussie CAD. Do I have it here? Probably not. Oh, I do. Aussie CAD. So yeah, it's quite volatile, isn't it? Like the Aussie CAD, like the price action inside this little zone is pretty kind of rubbish. You're right for your bias to be to the downside, because that's the overriding prevailing direction in this market. But it's pretty horrible. It's not great price action. Okay, so where was I? Sorry, let me go back to the dollar pairs. Look, you did brilliantly well on some of those dollar pair trades, so well done on those. You've taken a pound Aussie long today. The euro dollar looking to pull back to the 1956. Yeah, so that's up here. Yeah, but only if prices can get above the 1925. That's what we were just saying about. You know, if we break above these 3-day highs, then yes, we would expect a corrective move above that level. So it's not like we'd be buying at this stage expecting prices to continue, because the trend is to the downside. So we'd expect a little pullback trade and then the next leg lower. That's what we would expect to see. Whether we see that or not, obviously still remains to be the case. But we want to be mindful of yesterday's price action and suggest actually there's a lot of profit taken, and I think you yourself took a bit of profit on those trades. We got out of a few of ours sort of pretty late on Friday evening, booking in profit at these lower levels, because obviously anything can happen over the weekend, and we want to reassess the opportunities and look to sell the euro dollar if we were able to break below the 1847, but we failed to do so. And it was during the Asian session as well. So that's the euro dollar. So a lot of these markets are in the same position. We're quite close to potentially reversal trades to the upside. So the dollar yen has been benefiting. The price action over the last 3 days has been quite uninspiring, but we're clearly in this little sort of uptrend where you're making higher lows, higher highs as this market continues to make its move to the upside, pulling back and continuing this little progress. Now, it's not as easy as it looks, because we've tried to get into this a couple of times, and I think we broke even on one, and we took a small loss on this little price action here on Friday. So they're not all kind of easy to capitalize on type of trades, but our bias is still very firmly to the upside for the dollar against the yen. Yeah, the dollar Swiss, very similar kind of situation really. Yesterday, dead cat bounce off the highs. So the momentum is still very much to the upside. Is there enough momentum in today's market to actually make a difference? No, there's not. Could we get that corrective move back below? Yes, potentially. So we're as long as we're within this zone, we're in a decision-making point for these markets, and I think that's the title of this this actual video, is that below the 91.60 level is a really high probability trade to the downside. However, above the 92.35 to the upside is a high probability momentum trade to the upside. So this is your reversal, this is your momentum trade. So we're looking to capitalize on that move to the upside and see, do we get continuation or do we get a pullback? And then we can make decisions accordingly. So, and that applies across the board. So we are in a sort of a decision-making level in these markets. We are still in the Aussie dollar. We wanted to sort of stick with one of our dollar pairs. So we're still in this particular trade. So the stop loss is above the 3-day high, so it's above Friday's high. And really the challenge is there enough enthusiasm to push prices to the upside, or will we get further continuation to the downside? That's what we're looking to see happen. Prices flush through to the downside, and there's still this little pullback's not great, but let's see where this market ends, because that will determine probably whether we get continuation to the downside tomorrow or whether in fact we will get a corrective move to the upside. New Zealand had a similar situation really. Strong move to the downside. This is your pullback trade. It's we're a little bit closer to that particular potential buy trade in the New Zealand dollar, which is the 69.95. And if there is genuine weakness in these markets, what you'll find is the dollar is likely to weaken against a lot of the majors, perhaps not all of them, but certainly most of them, and they'll do so one at a time. So the New Zealand dollar might be the first trigger to break the 2-day high. Then it might be the Aussie, the CAD, the Swiss franc, and it has that sort of knock-on effect. So if we don't necessarily buy the New Zealand dollar, we can probably look at the Aussie dollar, see if we get that reversal trade to the upside. Same applies to the CAD, the Swiss franc. The dollar yen, we can probably, it's in a slightly different phase to many of these other dollar pairs. So maybe buy the pound dollar and certainly the euro dollar. So just to clarify, we're in this decision-making environment at the moment. Let the markets decide what they do, and then we can make decisions around that. We do like the markets like the S&P to the downside. So we had a really strong move there. This is a 4-hour chart. So let's go back to the daily. So really strong move on Friday. Surprisingly resilient. That's the major word for these markets, is that it would be natural for them to correct, and they're really struggling to correct to any kind of normal phase. As soon as you get a little bit of volatility, you get some buying creeping in pretty much straight away. Any fall, you'll get a little bit of a boost. Any fall, you'll get another. Well, this one's a very significant boost. So this is sort of market resilience like we've never really seen before. I think it's in everyone's interest for these markets to continue higher. There's little option really than to put your money to work. So I think there is, every time there's a bit of selling, I think it's more of a necessity now to keep sort of driving prices higher. How long is that sustainable for is a very, very good question. We obviously have absolutely no idea. We've had a few sort of minor softening. We had a really strong 35% reversal last March as a result of COVID. I'll just share that. There we go, and then all you're getting is out and out resilience in the face of some horrendous conditions. So a very short, sharp corrective sort of 35% move, and this is when the central bank stepped in and start putting all these emergency programs together, and this is the net impact of all of that central bank monetary policy moves. So we're up at these all-time highs, and this yellow level just signifies all-time highs up at that level. So really our bias is still to the downside. we're just going to need to be a little bit patient. So will we get taken out? Obviously, of course, it's absolutely possible, but there's certainly arguments to suggest now that actually these markets could do with just softening slightly. Nothing too great, but maybe like a bounce back to the 100 period moving average, something around the 6,000 or the 4,000 or the 4,100 level. Would be an interesting opportunity. It would certainly provide a lot more value in this market. The number of participants at these levels is we're at very significant lows. Like, we're seeing a 20 period ATR at a 35 pip range from high to low. That's pretty poor. If you have a 10 or 15 point stop loss, you're looking to make, even if you buy at the out and out low, which is very, very unlikely, you're still looking for 1-to-1, 1.5-to-1, something like that. You get a maximum of, on average, you get a maximum of 2-to-1. So you kind of want opportunities in markets that slightly give you better odds than those. They're not great odds. So there's again, all the selling, it gets counteracted pretty quickly. There's still strength for these tech stocks, not so much for the Dow Jones, as you can see. We think there is actually potential for this type of price action. That's what we're sort of gearing up for. The FTSE market is yesterday's dead cat bounce. Now we're seeing a little bit of pressure, but will this actually become a coherent move to the upside? We're in that decision making point at the moment. Same situation, will we reverse above today's high, and then that would be then at that point a decent buying opportunity. We need these prices to kind of make a move first, because at the moment they're not really giving us much to work with, and prices of course could go in any way, in any direction. This is quite interesting in Bitcoin. We're kind of below we're getting close to the 30,000 level. So this 29,600 level is a really, really important level for Bitcoin. So there's a lot of people trading Bitcoin that are hemorrhaging losses at the moment. That's really why we don't trade actively Bitcoin. It is kind of a buy-only investment with perhaps a small percentage of your capital. Now there'll be lots of people looking to buy. Certainly if we got a corrective move back to 20,000, I guess it'd probably just naturally find a little bit of support at that time. So it's not game over for Bitcoin by any stretch, but we were up at 65,000 nearly, and now we're down at 30,000. So this market, at the size and the cap of a market like Bitcoin, that's a very, very sizable move. And anyone buying Bitcoin, and they're buying it with derivatives, are taking exceptional losses. And unfortunately, you guys are not experiencing people's downside, and there's a lot of sort of get rich quick schemes where people are trading Bitcoin, and unfortunately the reality for the vast majority of traders is you need exceptionally deep pockets to be able to trade Bitcoin, and for us it doesn't stack up from a risk reward perspective. It's way too volatile a market for us. We do appreciate there's many that do. Many people like that kind of roller coaster of emotions where they're jumping up and down one minute and next minute they're distraught. So that's far too kind of extreme for us. We want to sort of try and keep our feet on the ground at all times when we trade. So and that's pretty much the case for the vast majority of profitable traders out there. We kind of got control over what we do, and it's not a toss of a coin type of decision. It's kind of built in. There's reasons for us to get in and out of every trade we get into. So below that 29,600 level, you'd expect a pretty sharp drop. Will any of these buyers be getting out at that point? We shall certainly wait and see. But tough time for Bitcoin traders for sure right now. They couldn't lose for the first 2 or 3 months of the year, and now they're just getting sort of hammered. So any profits that have been made, if they weren't banked, and we're seeing a lot of videos and a lot of sort of posts and emails and everything about how much money people are making in Bitcoin, and the reality for a lot of people is that's not really the case. You need to get into it early, and you need to be able to put up with the really significant swings. Okay, so as we look across this dollar, you see this is a session where we're probably going to be just flicking through these charts. Let's just have a quick look at the yen. So it looks like we're getting a bit of a turnaround, bit of a move. So the dollar yen is perhaps in the best position. Let me turn back on our Squawk service, and if we just get any market updates, we'll keep an eye on those, and we'll have a listen to those. So let's make sense of the dollar yen. Famous last words. Can we make sense of it? You see, these are one of these markets where you get your breakout to the upside, you push higher, you drift sideways, and then you get your structural failure to the downside. And then that reverses off the back of the FOMC, which you would expect. And then you just get the structural failure back to the downside with a lot of volatility in there. And then you get the flush trade to the downside. And then effectively you get your structural failure trades back to the upside. So really, it's kind of horrible price action. It's not something... It's not price action that shouts at us that, we have to take a trade in this market. We can take this high, and we can certainly anticipate probably a short-term move up to this level. Would be an option up to the 110.82. We're currently at the 110.56, so we've probably got the best part of 25 to 30 pips. Where do you place your stop loss? There's the natural stop loss place, but that's way too low. So we're looking at the 109 sort of 80 level. So you're talking about a 70, 80 pip stop loss for a 30 pip gain. So that doesn't stack up for us as a profitable risk reward trade, which is, again, you want to see what you're likely to get on the upside. So what we can do is, if prices push higher like this, and then they start to roll, and then if there is really strong momentum and we can break above these highs in here, then you can look to the upside for that positive risk reward, and you've got more of a natural stop loss.
For you, Bitcoin on its daily lows, now approaching the 30,000 handle.
Okay, so you'd probably hear a lot of this in the news as well, Bitcoin taking that move further to the downside. So actually what we prefer to do, we have too many question marks around this price action over the last few days. So we prefer to get into it above the 110.82 and hopefully have a corrective move that we can work with. Remember, over the last few weeks, normally you like sort of corrective moves. Markets would expect to move in that fashion. What we've seen on a few occasions is markets that just keep sort of ticking, and then you might see this really slight little pullback. It's not even a pullback, it's a little blip, and you get these linear moves, which is very unusual. And if you get those, we have to kind of sit on the sideline, because we're technical traders that want to sort of get in on the pullback trade, and we want to assess what's going on. And sometimes with these linear moves, you can't really assess what's going on. And if you do get in here or at that level, you've got an actual stop loss way below where perhaps you should. So it doesn't stack up. If you want to benefit from this much profit on a trade, you don't want to risk, 3 times. You don't want to take on 3 times more risk than potential profit. So does the trade stack up?
Some data out of the US.
No, it doesn't.
We're going to see the Philadelphia non-manufacturing regional business activity. No expectations versus a previous at 36.9. We're also going to see the Philadelphia Fed non-manufacturing firm level business activity. No expectations versus a previous at 22.1. Philadelphia non-manufacturing new orders index. No expectations versus a previous of 16.5. And the full-time employment index for Philadelphia Fed, no expectations versus a previous of 24.0. We'll also see the Philadelphia Fed wage and benefit cost index, no expectations versus a previous of 30.8. Data out in about 9 minutes.
Okay, we don't really have those news events on our calendar, so they can't be important events. So if you're putting a bullet to my head and you're kind of saying, I'll put a gun to my head, should I say, you have to pick a direction. We'd pick to the upside from here. So we'd probably expect prices to be pushing up to 110.80. Again, that's only a 25 pip move. But we've got other technical reasons to stay out of the trade. So not every direction or every market that is moving is tradable to the extent that we would like it. Elsewhere, will the dollar strengthen or weaken from here? We're not really seeing the momentum that we would ordinarily anticipate, and let's look at it on just off screen. Yeah, we're just seeing this sort of sideways moving pattern. New Zealand's a good representation for today's price action. It's just poor quality.
Just seeing on Down Detector that there's user reports indicating Binance is having problems. Once again, Bitcoin's Binance is having problems per Down Detector.
Interesting. Binance, it's like a Bitcoin brokerage, I think, are having troubles or having problems, or some sort of exchange for Bitcoin. Like, as that market heads lower, there'll be absolute carnage, and many of those that were probably telling us that the Bitcoin is going to the moon are likely to be in serious trouble. And who knows what the fallout of markets that crash sort of 50, 60%, 70%. What is the fallout of that?
Boeing CEO saying that less politics, more science is needed in its research plans.
Okay, interesting market conditions. So if we break through that 30,000 level, pretty certain it'll be all over the news. So you'll hear about it later on, I'm sure. Indice markets, is there much appetite to the upside? It looks like there's a little bit of appetite, but it's kind of mixed. It's kind of the US versus the rest of the world. Maybe you could put the Nikkei into it, but maybe not. Crude oil is just softening up at these $72, $73 level. Gold is just unfortunately in this little sideways moving pattern. So we had some really interesting price action for 2.5 days of last week. Yesterday we saw a reversal of that move, and now we're kind of in this little sideways moving pattern again. So one of the the principles that we try to adopt when we trade is that, we don't want to go chasing markets. We don't want to go looking for opportunities that are not there. If markets are in this indecision point or sideways moving, then we can be patient. We don't feel the need to be super active during sideways moving conditions, because it's largely a toss of a coin in terms of what direction this market moves. However, if we get a concerted break below the monthly low, we get a strong reversal signal above these highs here, then it's a slightly different decision. So you've got an easier to identify sell trade, stop loss above here, and you've got an easy to identify breakout buy trade as well with a stop loss below these levels. So whether you're buying or you're selling, there's opportunities, except where the current price is now is questionable. So who will win out? Who's in control? Buyers or sellers? Right now, nobody. But our bias would be to the downside, largely because that's the direction in which these markets have been moving. So that would be our preference. We'd prefer that market to sell off. It's just we're in that little zone at the moment where we've got to put a little bit of a question mark around our analysis. The yen, there's mild appetite for a yen weakness trade, probably more so against the dollar. So we're at 9200 level, let's say, and we've got like these highs up here at the 92.35. So we're talking about a 30 pip range before we start breaking out those levels to the upside. So what it looks like is tomorrow is probably it's probably likely to give us some better opportunities. We can continue to look at these, except through the European and the US trading sessions so far, there's almost a lack of direction, and all we're doing really is trading inside this range.
Top of the hour. Once again, we're going to see some data out of the U.S., the Philly Fed, non-manufacturing regional business activity. Going to lead with the headline business activity, then follow with the others. Data out in 3 minutes.
Okay, so it says we've got some business activity U.S. data out in 3 minutes, but I don't think it's major data to any great extent. Consumer confidence out of the EU, will that begin to improve, or is there still concerns? You can see we're coming from we're gaining confidence all the time, as you can see. These are all monthly figures. So this would be consumer confidence has never been positive. So we've very rarely been above 0 in the Eurozone. So we're picking up pace. We might get above 0 pretty soon, where the survey that's carried out, reveals that actually European consumers are a lot more confident about the current status and situation. Okay, so it looks like it's one of these trading sessions that we're really clutching at straws, but probably the dollar yen to the upside is probably the better opportunity out from many of these markets. But breaking above or below the daily highs would be the higher probability trade. So I think we're going to wait for those opportunities to come our way, basically. A lot of indecision, lack of volatility.
1 minute till the bottom of the hour in the data.
Indecisive markets. Those are not the greatest conditions to be that active. Indecision in the S&P.
Boeing CEO making further comments saying that vaccines may not make a full impact until late 2022.
Okay. So I'll just get a little bit of an update in terms of we do have another training session that we do need to go to, but Just want to see, we got a bit of news, bit of business related news out, and see if there's any reaction from this market at all. Just to remind you, on the daily time frame, there's a bit of selling. So will we get further moves lower? So there's your consolidation. Really, it's between 1925.
Spot 6 for the business, regional business activity, versus a previous at 36.9 in May. Fed non-manufacturing full-time employment index comes in at 4.3 versus a previous 24.0 in May. New orders came in at 27.4 versus a previous at 16.5. And firm level business activity index came in at 56.7 versus a previous at 22.1. Wage and benefit cost index came in at 42.6 versus previous at 30.8. Once again, Philadelphia Fed non-manufacturing regional business activity came in at 59.6 versus a previous at 36.9.
Nothing of any major interest.
U.S. equity news for you. AMD announces a new CFO, saying Rajesh Rohila will now be CFO.
Okay, so Bitcoin actually does tumble lower, below 30,000 for the first time. That must have just happened. Yeah. There's your move below the 30.
U.S. equity news for you. Splunk announced a $1 billion share buyback program.
So 4 minutes ago, we saw the market, well, probably 6 minutes ago, we saw it break through. 7 minutes ago, we saw it break through the 30,000 level. Hung around these lows, and now we've kind of bounced back off the 30,000. So further downside you would anticipate. But it's going to be interesting to see how these markets react beneath this little technical low down here. I wouldn't like to have to be trading Bitcoin right now, or to be a buyer of Bitcoin. And there's a lot of, there's the Nightingale principle as well, with which traders that double down. So they might buy in here, but then as the market drops, they might look to buy in here, they might look to buy in there. Market drops again, they'll keep buying as the market pushes lower, in expectation for the market to continue to the upside. But you know, how do you continue to just hemorrhage these losses? So
India news for you. India's antitrust body orders investigation against Google. So that's a very tough place to be mentally. It's pretty devastating, especially if markets just keep moving against you. Okay, so look, on that note, I'll let you guys go. That's the general consensus with these markets at the moment. There's kind of a lack of volatility, lack of clearly defined opportunities. So under situations like that, we can just exercise a little bit of caution unless we get a bit of price action that we can work with it. You know, we're working quite hard, but there is a kind of a structural failure trade to this market here. We're at that decision-making point again. Might see further downside motion. So, of course, if we get into any trades, we do post them through to our traders. So feel free to go to our website, thelivetraderoom.com, for more information. If you've got any questions, feel free to chat with us through our chat function there on our website. And let's see if we get a little bit more dollar strength. That's the direction in which we're looking for these markets to move. Okay, so look, we'll be back again tomorrow at 12:30. Thank you very much for joining us. Any questions, do feel free to let us know. Give us a thumbs up, subscribe to our channel,
We'll notify you when we go live, but we'll be back tomorrow, same time, 12:30, and see what opportunities we have then. So from everyone here at the Live Trader Room, thanks very much for joining us. Take care, and we shall speak to you very soon. Bye for now.